Good morning, everyone. Happy New Year. My name is Heather Iliff, and I'm President and CEO of Maryland Nonprofits. I'm delighted to welcome you today to the webinar, the PPP Update Seminar. That's the Paycheck Protection Program Update, guidance on the PPP loan and forgiveness, as well as the new aspects of the law that were recently passed by Congress that will impact Paycheck Protection Program. So we're delighted to have you here. We'll just wait a couple minutes while people are logging on. You should experience that you are muted to begin with. And we will have an opportunity for questions and answers. And we do invite you to put your questions in the Q&A box. I would wait to put in your questions until at least maybe halfway through the webinar, or if you have questions about particular slides, so that we're clear on which questions have already been answered in the presentation itself. So again, welcome. Happy New Year. My name is Heather Iliff, and I'm President and CEO of Maryland Nonprofits. And this is the update on the Paycheck Protection Program that is going to be presented by the Goldin Group. We have with us today Javier Goldin and Sergey Kajiv, who are now experts in the Paycheck Protection Program, have handled our personal PPP loan application, and also provide a whole suite of CFO services to the nonprofit community, including controller services and fully outsourced CFO services that we use as Maryland Nonprofits, and a discount is available to members of Maryland Nonprofits for the services of the Goldin Group. I can tell you that we've had excellent results, and our members who are participating in these services have given just phenomenal feedback about how it's changed their jobs, how it's changed their board's view of the financial management in the organization, and made audits a real breeze. And I can tell you it's just such a pleasure working with Javier and Sergey. Good morning.
Good morning, Heather. It's a pleasure to be here.
Thank you so much. So as we get started today, I just wanted to mention a couple of upcoming events. So as you know, Maryland Nonprofits, one of the big parts of our mission is to advocate for nonprofits and the communities they serve with an equity lens. And so creating a more equitable Maryland, as well as an equitable recovery from COVID, and making sure that our future looks better than our past. So the 2021 legislative session is shaping up to be unlike any we've ever seen. And we are going to have tips and tools for working with the legislature virtually, which is going to be interesting and new for everyone this year. And our keynote speakers are Senator Melanie Griffith, who is now President Pro Tem of the Senate and is leading a lot of the racial equity legislation that will be happening in this year's legislative session, as well as Senator Chris Van Hollen, who is our member of Congress, who I'm sure will have a lot of great information on the new bill that was passed by Congress recently for COVID relief. So other upcoming events that we have our bi-weekly calls are now moving to every other week at 1 o'clock on Thursdays. So that's going to be January 14th is the next one, Thursday at 1 o'clock. We look forward to seeing you there. And for those who are participants in the Nonprofit Development Center, you'll see getting the most out of the Nonprofit Development Center program. That's a free program for nonprofits that have less than $750,000 in revenue and are less than 10 years old. And you can sign up for that program with an easy online application on our website. You'll also see Chief Financial Officer roundtables, new Executive Director roundtables, Board Excellence. We're very excited to welcome the Governor's Grants Office on a boot camp around AmeriCorps and how to participate in the AmeriCorps program. And also coming up is a really top-notch Path to Excellence program for all the policies and procedures you need in your organization, and applying for the Standards for Excellence. And we're having a program for the MARFI, Maryland Association of Resources for Families and Youth, that is open to any organizations interested in alternative response and child welfare, and also partnered with the Chesapeake Plan Giving Council, the impact of diversity on high-performing teams coming up. So you can check those out on our website at marylandnonprofits.org and check on the events calendar. So without further ado, I'm going to turn the table over to Javier Goldin and Sergey Kardiv, who are going to lead us in this excellent program on the PPP 1 and the PPP 2. So take it away. Thank you so much for being with us today.
Thank you so much, Heather. Thank you so much. As I said, it's always a pleasure to be here. I am glad to see you after the holiday. We are, I think, going on the 8th year of representing and working with and for Maryland nonprofit as CFOs. It's been just an insightful experience. It's been a great experience working just with Heather and the whole team. And we're happy to provide information and value added to the members, as we always have. And the topic today will be addressing PPP 1, which is the CARES Act, as you recall, and PPP 2, which is an addition that was signed into law in December 27th. I hope that after we've completed the presentation, you will be, just as knowledgeable as we are. We, of course, work with the AICPA, which is the umbrella organization of all CPAs in this country, that in turn is very closely associated with the Treasury Department, with SBA, and with Congress as a whole. So the information is as new, as fresh as you could possibly get it. We are directly connected to those who, in turn, have a say in how the legislation gets forged. And we will go over some of the topics that we have advocated for and succeeded in getting into the legislation. So with all this great preview, let us please go into this. My colleague, Sergey, will be starting us off, and I will be intervening to give further context and feedback. So, Sergey, welcome, please. It's on you.
Thank you, Javier. Thank you, Heather. So let's get started. Our agenda for today will be to briefly go over the PPP history, give everyone a reminder of where we came from and where we are now. We'll discuss the forgiveness timeline, heavily focused on the new round of PPP loans. We'll discuss various applications available, address some tax deductibility questions, and provide lending options. Of course, at the end, we'll have time left over for questions. If at any time you have a question, feel free to write it into the Q&A box, and we will address it either during the presentation or towards the end. So as a brief disclaimer, the content presented here will be for general information purposes, and this webinar does not provide legal advice. This is based on the latest guidance, but keep in mind the SBA frequently releases new guidance. They're expected to release further guidance later today. So this early in the month, this changes almost day to day. So let's begin with a brief recap of the PPP. Of course, it was established to help the economy and the small businesses impacted by the coronavirus. The first act to address this was the CARES Act. This enacted the PPP. And as we all remember, it was a very hectic time. The cover period was very short. The allocations were not very favorable, but it was all in all a success. Many businesses did receive loans. And then we moved on to the second version, which was the Ppp Flexibility Act, and it amended many of the problems with the original loan program. One of the key elements is that expanded the coverage period from 8 to 24 weeks, which really gave companies a lot more time to use the loan and for it to be forgiven. It did establish a deadline of December 31st, 2020, for which the original loan ended. The allocations were much more favorable, 60% for payroll, 40% for non-payroll. And it also established many safe harbor provisions, which helped businesses retain employees and keep as much of the loan forgivable as possible. And now we move on to the current act, which was the Consolidated Appropriations Act of 2021. This is the newest and large bill. It was just recently signed into law on December 27th by President Trump. It expanded on many federal programs, one of those programs being the PPP, and it amended many of the original requirements, and this will also impact the future PPP loans. So this act touches on many aspects all the way back to the CARES Act.
Thank you. So just as a way of explaining so it doesn't get confusing. So the newer act that Sergey just touched on is going to address some items related to PPP-1, what we call PPP-1, or what it's called in the industry, and PPP-2. So yes, there is a mix of addressing both PPPs in the latest act, and we will sort out what relates to what. Please go ahead.
Yes, thank you for that clarification. So as we can see, the new CAA Relief Act addresses many aspects of the coronavirus. It's a $900 billion program, and it impacts small businesses. It provides direct payments to American citizens. It provides funding for unemployment insurance. It addresses education. So this $900 billion is spread out throughout the entire economy. We will specifically focus on the largest portion of this relief bill, which is the Paycheck Protection Program. And they allocated about $284 billion to assist with small businesses. So as Javier clarified, the new Relief Act addresses new PPP-2 loans and also amends some of the original PPP-1 guidelines. And let's go over the timeline you can expect. This new timeline affects both the original and the future PPP loans. So as of today, all the financial institutions, the lenders, they are accepting forgiveness applications. So if you haven't applied yet, then now is the time to do it. As far as the deadlines are concerned, the SBA has not issued an official deadline for when forgiveness must be applied for. In fact, as of today, they're saying forgiveness can be applied all the way up to the maturity of the loan. Now, one very, very important item to keep in mind is the deferral period. All of us that applied for the original PPP loan are currently in the deferral period. So this is the period after your covered period ends. So whether you were in the 8 weeks covered period or the 24 weeks, after your organization's covered period ends, we automatically went into the deferral period. This period gives us 10 months before payments on the loan are required. So although the SBA hasn't given us a deadline to submit the forgiveness application, we know for a fact after 10 months, all organizations will have to begin repayments on the loan. So we strongly advise that all organizations that haven't submitted for the loan forgiveness yet to do so now. Absolutely do it within this 10th month period. And once your organization submits the application to the lender will go through a 60-day review period. Now, the 60 days is a maximum. Most lenders are actually processing them much quicker, and they'll give you a decision at the end of their process. Now, this decision will then be forwarded to the SBA. The SBA has up to 90 days to evaluate the lender's decision. They may request further information, and there could be some back and forth. Once the SBA makes their final decision, they will ask the original lender to notify you of the final result. So as you can see, this could be a lengthy process. The lender has 60 days, the SBA has 90 days. So don't expect the forgiveness to be immediate. They will need some time to process all the applications, to work through all the guidelines. Now, once we do receive the decision, it could go a few different ways. The loan can be entirely forgiven, or it could be partially forgiven. And in some cases, it could potentially be denied. So if you are not entirely happy with the loan outcome, whether not enough was forgiven or if it was denied, there will be options to appeal the decision either with the lender or with the SBA.
Thank you, Sergey. So this is a question that it's coming up regularly, which is, when should I submit my forgiveness application? And as Sergey said, our recommendation is to do it now. The expenses should have been incurred up until December 31st, 2020. So all of us should have sufficient information now to request forgiveness if in fact we made the expenditures pursuant to the guidelines, that is, payroll and other expenses. Our CPA company, in conjunction with Maryland Nonprofit, as we have always done, have a value proposition for Maryland Nonprofit members, whereby we can submit the forgiveness application on your behalf. We will talk about also requesting PP2 money, if that is what the member wants. We will gather, review the documentation, archive the documentation, and represent the clients if and when an audit comes about. So you have someone to turn to, that is Maryland Nonprofits, and then to us to facilitate the way that this process works. So yes, there are many steps, but to the extent that they're carefully processed, we don't foresee to having any difficulties, particularly if the loans are below $2 million. If the loans are above $2 million, then there are additional requirements. An audit is almost guaranteed, but that we can deal on a individual basis if that were the case. So forgiveness, again, key point, let's submit the applications now. Please go on, Sergey.
Thank you. Now let's jump into this new round of PPP loans. This is officially the second draw and commonly referred to as the PPP2. The second draw loans are really designed to help the organizations that were hit very hard in 2020. Some of the new qualifications include a limit of employees of 300 employees or less. And the most difficult new qualification is the one highlighted in orange. 25% gross receipts decline in any quarter in 2020 compared to the same quarter in 2019. What this means is the SBA really wants to isolate the organization that was heavily impacted by coronavirus. And to do that, they will look at a quarter in 2020 and compare the same quarter in 2019. So for example, we will look at quarter 2 of 2020 and we will compare that to quarter 2 of 2019. And if the gross receipts reduced by at least 25%, then your organization will be eligible for another round of a PPP loan. And just like the first PPP loan, this second round is also going to be forgivable. We still need some clarification around the gross receipts calculations, specifically whether we're going with the cash or accrual accounting method. But the SBA is expected to release this new guidance actually today on January 6th. So very soon we'll have more clarification. As of today, we do know that the original PPP loan and the EIDL loans will not be included in the gross receipt calculations. Also, from the current legislation, it looks like they're looking for at calendar quarters. So this may impact some of the nonprofits that are following the fiscal year. And again, once we have more clarification, we'll release that in the future. Some of the other items, you must your organization must have used or will use the full amount of the first original PPP loan. This specifically is designed to prevent an organization from receiving a first loan and then immediately applying for a second loan. So you must fully use the first loan before you can get the second loan. Much like the first round, the total eligible amount will be calculated at 2.5 times the average monthly payroll. So this hasn't changed from the original PPP. What is new is for restaurants and hotels or any business that's in the accommodation and food services sector, they will be eligible for 3.5 times the monthly payroll. The maximum loan amount will remain at $2 million. And another very, very favorable option is that the organization can use either the 2019 payroll numbers or the 12 months prior to the application. So we have some options, and obviously you want to choose whichever one provides the largest loan.
Thank you, Sergey. So let me just expand on some of the items here, which may be a little bit confusing. So first of all, we're talking about second draw qualifications. What does that mean? It means for those who got monies from the PPP 1 and are now going for PPP 2. Okay, and that's an important distinction because we look at the first draw qualifications. That is people who did not get PPP 1 but won PPP 2. So what we're speaking here is about those nonprofits who did get the first tranche of PPP 1 and are going for PPP 2. And they qualify. The topics that are not entirely clear, it's what Sergio mentioned, which is how do we compute the gross receipts? As you know, in accounting, we have really two ways of reporting information. One is called the cash way, the one is called the accrual. Cash, as the name implies, is if we received donations, contributions, grants, et cetera, then whatever cash got into the organization and was recorded, then that's how the financial statements report the inflow of funds. The accrual method, on the other hand, is where we not only report the cash inflows, but also the accounts receivable. And most, if not all, nonprofits, of course, have promised monies that will be coming in. If we use the accrual method of accounting, then it's perfectly acceptable to include the promised funds into and record those into the revenue. So the question is, when we compare quarters, say second quarter of 2020 with 2019, do we use the cash method or do we use the accrual method? That clarification has not come to pass just yet, but of course it makes a huge difference. Why? Because we need to be very clear as to what constitutes a receivable and what doesn't, and of course it's subject to potentially quite a bit of manipulation. So that's a big if, which will be coming out hopefully by the SBA in a clarification today. If you follow our website or talk to Maryland nonprofits, we will be providing updates on all these SBA guidelines that are coming out. Let's see, any other point that I would, no, we will go into details as to whether the expenses that are covered in the PPP 2 are the same as PPP 1. You will see that they have been expanded, which is also a very good thing, but clearly the intent of this PPP 2 is to give monies to those organizations who can prove that from year to year they've had a substantial decrease in gross receipts. That was not the case for PPP 1. There were many who were fortunate enough to have either remained at the same level of revenue or even increase revenue from year to year, and they still qualified for forgiveness. This is different. You have to prove that your revenue actually decreased when comparing two quarters. Sergey, please go ahead.
Thank you. So the new relief bill also reopened the original PPP. So first-time borrowers that missed out last year, that they did not receive a loan, will now be eligible to apply for a first draw loan. So in other words, this is again your first loan, and this will come with slightly different guidelines. All organizations with 500 or fewer employees will be eligible, and this includes nonprofits, it includes churches, and newly eligible is the 501c6 and destination marketing organizations. So they were not able to participate in round one, they will be able to participate in round two. So again,
Thank you. Thank you, Sergey. Let me just expand on this because this is really, really important. So one clarification that came out after PPP 1 was enacted was the fact that churches were included, which was a great thing. This new act, though, adds on qualifying nonprofits, which are 501c6, and those are normally chambers of commerce and destination marketing organizations. So this is a huge change which affects our community and can potentially, make many of us qualify for the second round of PPP money. Please go ahead.
Thank you. Additionally, sole proprietors, contractors, and self-employed individuals who did not receive a loan the first round will be eligible to apply now. The calculations remain the same. It's going to be 2.5 times the average monthly payroll, or 3.5 times for accommodation and food service sectors. The maximum first loan will be $10 million. And again, the calculations can be very favorable to the organization because you can either use the higher 2019 payroll or the prior 12 months. Now, not all businesses will qualify for this PPP2 second round. And we are discussing the first draw and second draws. Specifically, and the largest one, your business must have been in operation prior to February 15th, 2020. And the reason for this is very specific. PPP loans are designed to help establish businesses that were impacted by coronavirus. This is not a loan to help your new business. So it must have been in operation prior to February 15th, 2020. Lobbying organizations and public traded companies will also not be eligible to participate. And to a smaller level, entities receiving shuttered venue operator grants are not eligible. These are venues such as museums and zoos, live venues, and they will receive their own separate grants. So they will still receive help, it just won't be through PPP. Now, as Javier mentioned earlier, the new relief bill expanded what is eligible to be forgiven. And this expansion is retroactive to the original PPP. So if you have not yet submitted your forgiveness application, this is another reason to submit it now, because the categories for forgivable expenses are much greater now than what they were last year. The forgivable expenses still include payroll, along with mortgage interest, rent, and utility payments. One expansion to the payroll cost is the inclusion of group health, life, disability, vision, and dental insurances. So it was a bit confusing in the first round whether life, disability, and other insurances were eligible, and it's been confirmed to be eligible and retroactive to the original PPP. And we also received some new categories. These include worker protection expenditures. So these are costs that a business had due to complying with COVID-19 safety guidelines. This could be, physical barriers, it could be clothing, it could be masks, any costs associated with complying with the guidelines. Operation expenditures were also expanded. It now includes software and cloud computing. Because of coronavirus, many organizations shifted to remote working. And because of that, there were considerably more cost increases in cloud computing. So this is really nice to see. This is going to be very useful for many businesses. Property damage is also included, relating to the 2020 public disturbances. If your business suffered any kind of damage due to the protests in 2020, and those damages that were not covered by your insurance can potentially be eligible for forgiveness through PPP. Also, supplier costs are now eligible, so any essential cost that your business must have from a supplier to run is now eligible. Some of the items
Thank you.
Oh, go ahead.
Sorry, let me just intervene here. So what is, I think, particularly relevant when we look at the expanded list of expenses that now qualify is what the government as a whole sees as necessary expenses of operating. One of the, as Sergio said, one of the more interesting expenses that we see here is that the recognition that the use of cloud computing technology for the remote work, it's an intrinsic part of every business, is a validation of where I think we as a community, nonprofits, have to go to. If you have not yet put everything that you have online, on cloud, and gotten on the bandwagon of the latest technology, which has proven to be a lifesaver for many of us who were in the bandwagon early on, this is the time because the costs are now recognizable and operating an ongoing cost, meaning that everything and anything that you spend towards your tech stack, your technology infrastructure, is going to be an ongoing expense recognized by the government as necessary for doing business. So it's a validation of an outlook that we've had for a long time, which is strengthen your infrastructure, go on the cloud, and be ready for whatever may come ahead. So again, it's a view into what the government recognizes as necessary expenses for operating. Please go ahead.
Thank you. Here and Sergey, I wonder if you might pause for a few questions here. There's some in the chat and in the Q&A.
Of course.
One is,
yes.
Accidental death and disability insurance allowed too? And I guess life insurance is included there, so I think that would be under life insurance.
Heather, I'm having trouble hearing you. Which question is it?
Oh, please go ahead. Sorry about my microphone. Please go ahead and look in the chat.
So the question, Sergey, is if you look at the chat, let's start from the very beginning. So let's just address some of the questions. You know, we can always proceed. Mm-hmm. So the first question is that they keep changing forgiveness guidelines, and how should we submit the forgiveness form? We will cover that. We will show you what forms need to be submitted for which thresholds. So please hold on. We'll address that question. Second question, we've answered that. It's any one quarter has to be below 25% when compared quarters and from one year to the next. So it's not just the first quarter. It's any quarter in 2020. Calendar quarter when compared to any calendar quarter in 2019. Now, granted, that's the information that we have, that's the latest, but through the ICPA, we have requested clarification on that topic. So expect a confirmation on that matter. Mm-hmm. We make the recording, okay. So the question, Sergey, is AD and the insurance allowed here too as a deductible expenses?
So insurances in general, especially company-sponsored insurances, are going to be eligible to be forgiven. I believe the only
Right.
one that's not eligible is the QSERA and the HRAs, but otherwise, group health, life, all of those sorts of items are eligible.
Right. So I think, yeah, that answers the question. So the answer is, our interpretation of the law as it stands is yes, due to the expansion of the coverage of all insurances. But again, we can request clarification if need be on this. The other one, are the expanded eligible expenses only for PPP2, or can they be used in PPP1? Sergey, correct me if I'm wrong. I think you said that it's for both PPP1 and PPP2. Am I correct?
You are correct. So the new expanded expenses are retroactive all the way back to CARES. So they're retroactive back to the original PPP. The only condition is you must not have filed for forgiveness yet. If you already filed for forgiveness, the bank will process it, or is it as it normally would. But if you're filing as of today, then yes, all of these new expenses are retroactive to the original PPP.
Excellent, thank you. And this is consistent with the advice that we have been given, which is to wait until December 31st at least to file the forgiveness application. We've proven to be right, as this is a breathing, ongoing, changing legislation. So yeah. Is it acceptable to use 100% of a PPP loan for payroll only? The answer is yes. Yes, both for PPP1 and PPP2, if the full amount of the loan is used for payroll, then that is fully acceptable. The thresholds, either the 75 originally identified or the 60% in subsequent modifications, it's a minimum amount. But if all the money was used for payroll, then we have in fact fulfilled the intended purpose, which is to retain our employees, to continue paying them, and to maintain a level of readiness in the economy that when and if, and we're very close, vaccination comes to pass, we are all ready to continue to work. So the whole thrust and objective of the CARES Act, which I thought it was brilliant, and it was used in most of the world really, is to incur by the government substantial expenses at this stage by providing loans or grants so that employees were not fired, so businesses did not close. So we would maintain our businesses open, and when and if this goes away, we are ready to fire up the economy again. Alternatively, as you can imagine, if we were to fire employees, businesses close, to restart the economy would take that much longer. So the objective was to keep us going at whichever expense that we could, so that we could reignite the economy at a moment's notice. Yeah. So, and the last question that we have, sorry, please.
Hear me here?
Yes.
Yes, a little bit muffled, yes.
Okay, so, oh, I see you're on the last question in the chat. There are also questions in the Q&A box.
Yes, I'm sorry, Heather, but you're going in and out.
There are also questions in the Q&A box.
Okay, thank you. The last question in the chat is workers' comp covered? And the answer is yes. Sergey, can you confirm that?
Yeah, it is covered.
Okay. I'm moving on to the Q&A questions. So let me make a pause here. Let me continue with the presentation. I want to make sure that we have sufficient time to cover the basic information, and then I will circle back to the Q&A questions that we have not addressed. So Sergey, please, the floor is yours.
Thank you. And yes, please, if you have any other outstanding questions, just go ahead and enter them into the Q&A box, and we'll address those at the end. As Javier mentioned, the allocation, the split between payroll and non-payroll is maintained at 60% payroll and 40% non-payroll, but this is at least 60% payroll. So if you want to spend 100% on payroll, that is of course fine, and that allocation will remain for PPP2. The covered period for the future loans will remain a choice of 8 weeks or 24 weeks. So based on your organization's needs, I think most would benefit more from the 24 weeks, but you will have the option to do a short covered period of 8 weeks if you choose so. And there have been many applications. This legislation has been ongoing, evolving for almost a year now. It's been thousands of pages of legislation. And as a result, we have at least 4 current applications. The first one, which is the PPP loan forgiveness application, this is the main application. It's been revised several times, but it's still used. And by far the most complicated. This is the application that requires the most calculations, most reports. So if your organization is able to use one of the easier or more simplified applications, we definitely recommend that route. But for the more complicated ones, you will use the original application. One of the easier
Sergey,
applications.
Sergey, let me just expand on that. So under what circumstances would you use the lengthier PPP forgiveness application? These are used, I think I can identify 2 ready conditions. One is loans over 150, that's number 1. And 2, if you have had to use any of the safe harbor provisions, which include either wage reductions or FTE reductions. And in prior webinars that we carried out with Maryland Nonprofit as well, we explained what those were. But there are calculations that need to be made if you adjusted salaries throughout the covered period and or adjusted the number of employees that you had. So those would be the conditions under which you would have no choice but to use the lengthier application.
Exactly. If you reduce your FTE counts, if you had wage reductions, then you'll be forced to use the full completed application, which requires the most documentation and the most calculations. Now, if you're an employer that did not reduce anyone's wages by more than 25%, you'll be eligible to use the 3508 EZ form. Commonly, this is just abbreviated as the EZ form. This is about 2 pages, very streamlined compared to the full application. So if you have not reduced your wages by more than 25%, you might want to focus on this one, see if it meets all the other requirements. One of the smaller applications is for borrowers that took less than $50,000 loans. This is a very streamlined application. It's going to apply only to the smallest organizations. And the newest form, the Simplified Forgiveness Application form, this is going to be big. It's going to address many of the organizations that took PPP loans. And it applies to those who received $150,000 or less. And we'll go into the details on this one right here on this slide. This simplified forgiveness application is currently in development by the SBA. They have until middle of this month to complete and release this form. It's designed to streamline the forgiveness, and specifically for organizations that took a loan of $150,000 or less. Well, and this will be retroactive to the original PPP. So this application applies to PPP1 and PPP2, whether it's your first draw or your second draw. And when we say simplified, what we're saying is it's actually going to be 1 page. Not many calculations, a single page is going to require your signature. We expect to include the loan amount and the number of employees retained. And you will have to provide an estimate of the loan spent on payroll. Now, this is interesting. The legislation says estimate of payroll costs. It doesn't even ask for the full accurate payroll costs. And you must attest to complying with the PPP requirements. The legislation also says that you will be required to retain employment records for at least 4 years and other records for 3 years. Other records would generally refer to payroll documents such as payroll registers, 941s, W-2s. So it's very, very important that you save all these documentations, you have them available. There's always a chance the SBA will go back a year, 2 years, 3 years from now and do an audit of this forgiveness application.
Yeah, Sergio, let me just address the last point that you have there. So an issue of contention that we in the accounting profession have fought with the SBA and Treasury, particularly the SBA is the arm of Treasury that it's facilitating the loans, is whether or not in the first tranche, right, the PPP1 in the CARES Act, there was a requirement that we showed a loss of revenue. And the answer is no. As you recall, we had to make a statement and sign that said that we believe that we may be impacted by COVID. And that was all the confirmation that we had to do. What we at the ICPA argued, of course, is that, look, if we had a business, a nonprofit, that was at risk of reduced revenue, and we were ingenious enough, hardworking enough, resourceful enough to turn it around so that we could still get the revenue and provide the services to the community, then why should we be punished? At the time that the application was signed, we did it in good faith, which was the requirement then, and we should, under no circumstances, be punished for either a stable revenue or an increased revenue. So our recommendation and our interpretation is not to worry. In PPP1, if our organization maintain the same level of revenue and or increase, you were lucky enough to even increase revenue, and many organizations were able to do that. And again, I do believe that it is resourcefulness, is skill, is of course luck always plays a role. There is no justification for punishing those who were in that situation. So not to worry. For the first tranche, even if you had more revenue, let's just submit the forgiveness and we shouldn't have great difficulties. Please go ahead.
Thank you. One of the larger clarifications from the new relief bill is the tax deductibility for PPP expenses. There was some confusion between what the IRS stated, between what Congress intent was, and this has finally been clarified. The new bill confirms that expenses paid with the proceeds of a forgiven PPP loan are tax deductible. And this is retroactive to the original PPP, and it will be so going forward to PPP2, first and second draws.
All right, so let me please go into this a little bit more, because this was a huge issue that we fought for quite aggressively. So first of all, let's not confuse the whether the money's turned into a loan with the tax deductibility, right? So those are two separate issues. Whether the money that is given to us is forgiven or turned into a loan is addressed separately, and that has to do with how we spend those monies, right? So to the extent that we comply with the guidelines for spending the money, then the money is no longer a loan, meaning we don't have to repay it, but it's rather forgiveness. That's issue number one. Issue number two, when we do our tax return, and I know that nonprofits are not taxed, but for those nonprofits that may have subsidiaries that are for profit, or if you know of any nonprofit, the tax deductibility of the PPP expense was a huge issue, because to the extent that the PPP expenses were not disallowed, then the net effect from a tax viewpoint is that we would be taxed. So conceptually, the IRS said, look, you can't both declare the income to be non-taxable and also require the expenses to be excluded. But there was a fault in the logic there, because the original intent was in fact that none of the money would be taxed. So if we either excluded it from the income or were not allowed to exclude it from the expenses, the net effect on the tax would have been a taxable transaction. So this we fought hard for, and we're so happy that this actually happened. And the bottom line is this: the expenses that we incurred and paid for with PPP money are fully deductible. And of course, if you have any questions on how to account for this exactly, we'll be happy to do it. But this was a big win for the business community as a whole. Please go ahead.
Yeah, this was huge, and this new bill really got a lot of items correct. Okay, so where can you apply for the second round? And this will apply to both the first and second draw loans. As of today, SBA has not indicated when the financial institutions will be allowed to accept new PPP loans. Some of the milestones that we're looking out for is today, January 6th, the SBA has to release new guidance and new rules for the first and second draw. Now, the banks are waiting for this guidance to adjust their applications as needed, and it's in order to accept new applications. And also on January 20th, the deadline to release the new forgiveness application is due. So although you can't apply for the second round immediately today, we definitely advise you to get prepared in advance. You want to have the documentation ready for when the loans open. Much like the first PPP, which exhausted the funds within a week and a half, we expect the new funds to exhaust quite quickly. So if your business needs this loan, then prepare in advance. And when it's time to apply, you have a couple different avenues. You have a couple options. You can go with a traditional financial institution, you can go with a federal credit union, or a newer option is a fintech firm. Those are the financial technology lenders. This is a very important and strategic option here. If you have a good relationship with your current lender, whether it's M&T, whether it's a traditional institution, go ahead and work that relationship. If you were happy with the first service, reapply with them. You have a trusted relationship, and there's no need to break that. But if you're not happy with some of the actions of the first round, you have other avenues. The new online companies such as PayPal, Vista-Credit, Lendio, they are very technology driven. They have streamlined applications. They are approved by the SBA. So we have plenty of options to pursue.
Thank you. This is a huge point. I think they have actually expanded our options for requesting monies, which is a great thing, because as you recall, there were multiple bottlenecks and different implementation timelines for the submission of the application. Many of us were in the dark whether we were going to get the money and when the money we were going to get and whether it was exhausted. So they have actually now expanded the places that we can go to. So 2 points that we should take away from this slide. Number one, if you think you qualify for PPP2, let's begin gathering the documents, doing the calculations, see if this is the case. Number two, let's start choosing which medium, which financial institution we will use. Some of the time comes we can readily submitted and not get bogged down in the bottlenecks that we experienced in the first round. Yes, please, Sergey.
So let's take some questions from the Q&A box.
All right. Let me pull those up, please.
So the first question is, what documentation is needed to show gross receipts for the quarter selected? So we're still waiting on the exact clarification of what documentation will be required. So this will be announced by the SBA, hopefully later today.
All right, let's go to the second question. Do the funds of revenue reduction of more than 20% have to be audited, or is it unaudited? So I think that the thrust of the question is, whatever it is that we submit based on the guidelines, which is calendar quarter of 2020 compared to any other calendar quarter of 2019, a reduction of 25% has to be audit proof, right? So we have to gather, like I said, two things. One, gather the documents and do the calculation. And number two, choose the financial institution. So the answer is yes, whatever we do must be absolutely audit proof with all the backup documentations to be saved for at least 3 or 4 years.
Mm-hmm.
Okay, let me take the next question. I suppose that the part of what makes for our financial uncertainty is the possibility that receivables will be forfeited. My receivables are not 100% guaranteed, pledges, for example. I wonder how this will be taken into account if accrual is the method decided upon. So very much on point, Elizabeth. And this is why whether the accrual method will be acceptable as means of showing a reduction in gross receipts. Because of the uncertainty of the receipt of the collection of these receivables, and because of the uncertainty of what we define as being a receivable. Do we need, a pledge letter in writing? Is a verbal commitment sufficient? What if an individual says, I will give you X amount of money? Do we count that in or not? So yes, it's quite unclear at this stage. When clarification comes out, we'll be happy to share it with you. But you have your finger on the issue now as to why identifying whether cash only or accrual will be accepted for purposes of the comparison of the reduction in revenue. Mm-hmm. Okay, next one. Are payroll processing fees forgivable? My understanding is that yes, they are. Payroll processing fees are part of the payroll costs. Sergey, can you correct me if I'm wrong?
No, I 100% agree with that. And especially with the new expanded categories, which state software and cloud computing are eligible. And payroll processing is definitely a software cost that your business needs. So I don't see why it would not be forgivable.
Good, thank you. Next one, are laptop purchases for remote work forgivable? So I don't think that I've seen specifically laptops, but our recommendation would be that yes, because that is part and parcel of the move to the cloud and the remote work. So any laptop that was purchased for distribution to your employees as part of the tech stack, and tech of course includes hardware and software, should be part of the definition of cloud-related expenses. So the answer is yes. We would recommend including laptop purchases. Next one.
Are
audits required? I'm sorry, please.
No, our audits required for the quarterly expenses reports. We do not want an audit. I think there's always a possibility of an audit, and one should always be prepared and have your documentation ready to support one.
So, Sergey, I think that the question is a little bit differently here. If I read the question correctly, it's saying, does my organization need to have an external audit for me to qualify for requesting PP2 money? And the answer is no. There is no requirement that every nonprofit who requests PPP2 money undergo an external audit by a CPA firm? So the answer is no. You do not need an audit. That's not to say that whatever it is that we do should be audit proof. That is, if someone requests the documents, we have them in-house.
Mm-hmm. Thank you.
Okay, we want to take the next one. What is the period covered? What is the period covered for the payroll application in PPP1? Was it 8 weeks? Is it the same for PPP2?
So
Sergio, you want to address that?
Yeah, the covered period will be a choice of 8 or 24 weeks. So you're allowed to choose what is best for your organization.
Okay, thank you. Next one. We applied for PPP1. Sorry, but every time someone posts a question answer, they're
getting shuffled.
The text keeps moving. So I have to keep scrolling back and forth. So next question. We applied for PPP1 as a small nonprofit, but we did not receive any funding. Can we apply for a new PPP? The answer is yes, absolutely yes. If you did not get any funding for whatever reason, and I don't know why you would not have, then you can most certainly apply for the second round. Yes.
Absolutely.
Yeah. So the next one says, so in other words, the application opens on January 20th and can be submitted as early as January 20th. Can it open earlier or later? So again, we don't have yet clear guidelines of when banks or other financial institutions will open the portals to submit applications. As you recall, in PPP1, it was really up to each of the banks to develop their own technology for the application. So we just have to wait and see how this develops, but we don't have a concrete date.
Mm-hmm.
Okay. What is the available time frame for PPP2 first draw?
So the SBA and the financial institutions, they haven't began accepting applications yet. So this is one item that we're waiting for clarification. When will they actually begin accepting applications? As of today, this is an unknown. But we expect it's going to be most likely towards the end of the month, because the SBA has to finish various forms throughout the middle of the month. And of course, the banks will need some time to interpret and update their application systems.
Thank you. The next one is, how do we decide whether to use the form 350 easy, 3508 easy, or wait for the simplified form to become available for forgiveness application? So, you know, we're talking a matter of, I think, of weeks. Our recommendation would be to just wait a couple of weeks, and then you can decide. But if you feel already comfortable filling the 3508 easy, please go ahead. There is no loss of any privilege or right by doing that. So if you want to wait a few weeks, otherwise just go ahead with 3508 easy.
And to expand on that, the simplified form is limited to anyone who took a loan of $150,000 or less. So if your organization meets that requirement, then go ahead and wait. But if you receive a loan that's larger than $150,000, then you'll want to go with the easy form.
Okay. Next question. My first lender was fine, but it was very impersonal and sometimes frustrating. I've heard from others who were very happy with small local banks because of their personal service. Is there a downside to using a different lender the second time around? So I think it's a difficult question to answer. If you have a relationship with a particular lender, a commercial bank or a credit union, then at least in our experience, the processing of the application was much smoother. Why? Because if you had any questions, you could call your bank rep. They could actually access the information required and get to you right away. In other words, you have an established relationship with whom you can communicate rather quickly and then get answers to. So that would be the only downside, that if you have a new lender, it's a new relationship. If you have questions, you probably have to go to an 800 number and hopefully you get an answer, maybe yes, maybe no. But other than the personal service with regards to the clarification of the process, there is no other downside.
Mm-hmm.
Okay, next one. I am confused on one point. It says, it seems clear that 25% reduction of revenue is required, but then you said that increased revenue is fine. Is the intent not to punish nonprofits? Which is it? Okay, so I'm sorry that if I confused you all. So let's separate PPP 1 from PPP 2. The comment that I made regarding the potentially increased revenue had to do with PPP 1, okay? And what I said is that for purposes of forgiveness, PPP 1 monies, that is the first tranche of monies, the ones that were given in 2020, will not look at your revenue. If your revenue decrease, stay the same, or increase, has no bearing on the forgiveness. PPP 2, on the other hand, that is the monies that are coming now pursuant to the latest legislation, and that will be given out in 2021, will look at your revenue numbers. So I tried to make the distinction between the PPP 1 money and the PPP 2 monies, and there are different guidelines for forgiveness of those two. PPP 1 did not require any income or revenue test. PPP 2 does require an income or revenue test.
And specifically, specifically for PPP 2, that revenue decline is for the second draw borrowers. So those are the ones that received one PPP loan and now they're looking for their second loan. For those in the second round, that will be their initial PPP loan, then you don't have to worry about that 25% drop criteria.
Thank you for the clarification. That's important, Sergey. Thank you. Okay, next one. We did not reduce the number of employees and our total payroll was greater than 60%, but we only paid employees for 10 out of 24 weeks of the covered period. Will we need to use the original loan forgiveness application and not be able to take advantage of the easy form?
No, you'll be able to use whichever form is most applicable to your situation. So if your organization took a loan that was less than 150,000, you may want to wait for the simplified form. Then you'll have all the options available to you and just make the clearest and best decision. But each form has a specific use. So based on the complexity, then you choose the right form. But currently you'll be able to choose any form that applies to your organization.
Thank you. Next one. Will Maryland nonprofits be providing a worksheet to help with the prep? So we haven't discussed it with Heather. That would be her call. Heather, I don't know if you want to chip in or we leave that for later.
So are organizations generally needing a worksheet before they fill out the application?
So the answer is yes. I mean, you have to do a computation to see whether or not you qualify.
Okay, so yes, we'd be happy to work on that with the Goldin Group and follow up.
Okay, thank you. Can we include costs for general liability insurance? Sergey?
You know, I'm not 100% certain on this one, so I don't want to give the wrong answer, but we can research it and get back to you.
Okay, thank you. This is, so if we're applying for PPP Simple Forgiveness Loan, will this be available before the PPP2 app is released?
The SBA has until January 20th to release the Simple Forgiveness form. So we don't know when the PPP2 will be active, but we know that the Simple form will be available on January 20th.
Thank you. Next question is, when do you think the worksheet prep will be available? We don't know yet. We need to discuss it with Heather, and we'll be happy to update on a timeline for this. I mean, we haven't prepared it yet, so we just need to time it right. Okay, so I'm jumping now to the chat. I think there were some questions that we did not cover. So the question now, is PPP money received in 2019 included in gross receipts for that quarter to compare against a similar quarter in 2020? I believe the answer is no. You do not include PPP money for purposes of the revenue test.
That's correct. The PPP loan is excluded from the income.
Next, will we be able to have the slide deck? I believe that Maryland Nonprofit has made the prior webinars available, and this is no exception, but please, Heather, if I'm speaking out of turn, let me know.
Yes, I just put a link in the chat that will be available to the members in the member community, and the link to the recording will be on the public website.
Thank you. Next one, if you do not have a preference for a lender, do you recommend applying to 2 lenders like the last time and pulling outstanding applications once a loan is approved? Or do you anticipate this round will be less maniac and it would be okay to wait out an application with 1 lender? So, you know, it's difficult to answer, but it would be my guess that given the expansion of the platforms through which we can apply for the PPP2 money, that this will be less cumbersome than last time. So our recommendation would be that you stick to 1, because then it becomes problematic if both of them accept your application. You have to go back and say no, et cetera, et cetera. So our recommendation would be stick to 1, the one that you either use or the ones that you think and you have references that has been good, and then the money should be forthcoming. And I think that's it. That's it that we can see here. We are almost on time, so I just want to thank Heather again. I mean, it's always a pleasure to work with Maryland Nonprofits, with Heather specifically. Thank you for the opportunity to have this webinar, and I hope that it was useful to you and the members.
Thank you so much, Javier and Sergey. You can find more information on Maryland Nonprofits at marylandnonprofits.org and our COVID resources page, where we'll have a link to this recording. And here on the screen, we have GoldinGroupCPAs.com, and you can contact the Goldin Group at info@goldingroup.biz, phone number 301-913-0008. We're so grateful to you at the Goldin Group for staying on top of these fast-moving developments, and you can count on Maryland Nonprofits to keep you updated as soon as more clarification becomes available on an ongoing basis. And our member meeting next week, Thursday at 1 p.m., will definitely have some updates as well as broader updates on the bill passed by Congress. Please join us on Monday for the legislative preview. Registration is still open for that at marylandnonprofits.org. Thanks again, Javier Goldin and Sergey Kajiv, for joining us today for this PPP1 and PPP2 webinar. Have a great day, everyone.
Thank you, Heather.
Thank you
as
very
well.
much. Thank you. Thank you.